Welcome everybody. I think we're making history here. I think I'm the first guy that gets to interview his successor in front of a bunch of colleagues. So super excited to be here, and we'll get right on with it.
Dave, I was just going to say that speaks to the grace and smoothness of the transition.
Oh, it's smooth. Smooth sailing. Speaking of smooth, believe it or not, it's hard to believe it's almost been a full year. Time flies, and I'm sure for you it's felt like a couple years, but not for me. So you've been here for a year, and all joking aside, your previous experience was amazing. 17 years, the world's largest operator, doing transactions and operations and development all over the world. What's been your biggest takeaway? You came into a big platform, but certainly a different kind of business. After 1 year, what's your biggest takeaway?
So I would say it has been a year, and it's been a very fast year in many ways. Probably the biggest change or observation I think is that the market and the industry are changing very rapidly, and so the industry that we all sit in today, here in 2023, has changed dramatically, even over the past year, dating back to late 22. We've seen interest rates rise. We've seen equipment become more expensive. We've seen lead times grow. Chat GPT dropped and sort of changed the world for artificial intelligence less than a year ago. And so here we sit, and we're still in the data center industry. We're still serving largely the same set of customers, but their requirements are changing. The economic environment, the financing environment is changing. The business is, as Cyrus One is changing and evolving with that. And I think that's the great opportunity and the great challenge right now is how do we as Cyrus One continue to keep up with the industry and continue to serve our customers well, while also leading in the areas where we really focus.
Speaking of change, over the last 20 years, we've watched this business evolve. And it's always been customer-driven, network-driven. It just continues to evolve. Over the last 18 months, we've seen this other new evolution in demand. And I guess the question is, from your perspective, after watching all the other changes and how the industry adapted, how the operators adapted, how has the current demand changed or affected or impacted the strategy of the company when you kind of look forward over the next 5 years?
So, easy place to start is artificial intelligence. Artificial intelligence has been around for quite some time, and there have been artificial intelligence deployments at Cyrus One and many other places going back a number of years. But you can point to the event where ChatGPT deployed and was the fastest ever adopted application, leaving everything else in its wake. And that has then translated into a real push by major tech companies, by startups, and by players in between to not only adopt AI in their core business, but also to figure out how to build the infrastructure to scale and be there for the future growth. And so for us as Cyrus One, dealing with the customers who are across that continuum, there's a challenge of how do we ensure that we have the capacity to fulfill that demand, and then also how do we ensure that we're building the right infrastructure that actually meets new requirements. And so the obvious metric that gets discussed a lot is power density and power per rack. And I think we're fortunate, although we've done it somewhat secretly, that we've learned a lot about how to support very high density deployments, and we're now productizing that and executing that with an offering we call IntelliScale that we announced recently. And so I think that's certainly one of the big pushes across the industry. But then, I also think the industry is maturing and evolving as we get larger and more visible. There's certainly a lot more activity in the political arena, in the sustainability arena, and beyond. And so at the same time that we're dealing with the demand and figuring out how do we meet these new requirements, we're also needing to scale up the company and mature the company to deal with what's in front of us over the next 10, 20 years, which I'm excited about the prospect, but there's no doubt there's a lot of work to be done.
Switching to a little bit of a different topic, we've seen a big wave. We're at the tail end of a big wave of this public to private transition of several platforms. Earlier today, our friend Paul Vasilopoulos spoke about the M&A deals that were done in North America over the last couple of years, starting with, of course, the $15 billion take private by KKR and Gip. And it got a lot of press, but one thing we've never really learned is what does that do for the company? What has it done to enhance the position of the company, both in North America and globally? And I have a follow-up question after that.
So the take private of Cyrus One by KKR and Global Infrastructure Partners, GIP, happened shortly before I joined. So I've really been part of the company only under that structure. And the value that both of those firms bring in terms of investment, in terms of capital, in terms of governance, I think is very consistent with what they bring to their other investments. Where it really stands out for the data center industry, I believe, is that the capital requirements are growing, both in terms of volume, but also in terms of sophistication. And so the advantage we enjoy of having KKR and GIP as our two sponsor investors is not only just the volume of capital that they can bring to bear, but also the sophistication and the relationships that they bring that are going to help us build a business and keep up with the scale of growth that's involved. And so all of those factors together, I think, position Cyrus One well. But I would also add, there was a time in this industry back 2000 to 2005 when a number of companies really went through financial distress, and the companies who acquired assets at that time did very well. It was just a great opportunity to be buying assets at discount. I don't foresee that happening again, although I know I and others are poised should it ever materialize. But the flip side is that as the capital requirements of the business grow and as the scale grows, I do think that there's going to be some separation or weeding out of players who are in the business, capable at small scale, but then really struggle to meet the large scale requirements that many customers are demanding. And so for us, having the KKR and GIP sponsorship behind us is just another element of due diligence that customers are doing on us and on our competitors to satisfy themselves that we're going to be there not only to deliver on date for ready for service, but that we're going to be there throughout the operation of the facility, which could be 5, 10, 15, 20 years, however long. And that endorsement that we effectively have from the investment is really helping us in a lot of customer discussions.
The follow-up is, the company was pretty hyper-focused on the tier one kind of digital gateway markets. And with this change of strategic partner ownership, however we put it, has the focus shifted to some of the second tier markets where power and land are more readily available now that we're looking at all these scarcities?
So the opportunity with that the take private brought, both with the capital and with investors who had very high ambitions for what the company could become, certainly has us considering new markets and opportunities. And we've recently announced a joint venture in Japan where we'll be developing data centers and growing from there, which is a complete step forward for Cyrus One, even given some of the past relationships that the company had with other data center operators in the Far East. And so we're absolutely looking to expand our geography both globally, and Japan is a great market for us, but considering secondary markets even in the US and Europe, with the filter or screen that says that we're generating what I believe are attractive returns and performance in the existing markets, we see quite a bit of runway for growth in those markets. And we need to ensure that we continue to satisfy customer demand and requirements in those markets and not let the opportunity to expand to a new market become a distraction.
Speaking of Japan, congrats. You just flew over to Osaka, announced a big partnership. It's a big deal. It's the first partnership in our industry where you have an electric generator utility. For those of you who don't know, KEPCO is a $30 billion the electric company, the utility in Osaka. And this partnership is the first with the data center company and the utility company. And so, tell us about the deal, tell us about the partnership, and then also kind of elaborate. There's a competitive landscape in Japan. What does this do to that landscape?
So, very pleased and happy to be partnered with KEPCO. We went through quite a bit of work evaluating both the Japanese market and where Cyrus One could position, as well as working with the team at KEPCO on a shared vision for what the joint venture can and should become and what those opportunities will be. We're a number of months into it, and I'm very pleased that the culture and the tone of the joint venture is incredibly constructive and aligned. Not all joint ventures work out that way, unfortunately. And so I'm very pleased with the progress we've been making and their selection of us as a partner and our selection of them. The KEPCO is a regulated utility, and they have a number of deregulated businesses as well. And so their regulated division deals with us on a non-discriminatory basis like it does everybody else, which is no different than what we would see here in the US. But then they have other divisions that are in the fiber business and the land development business, and a few others that are not regulated and that we work very closely with. And I continue to believe, although I don't have the evidence for this yet, that there's a coming opportunity for power companies and data center companies to better align both where infrastructure gets deployed, how it gets operated, and even how the data centers integrate to the grid. And today that's largely unrealized. And the opportunity we have in Japan, which is a very large domestic market, probably the third largest data center market in the world after the US and China. But similar to other markets, there are challenges on finding land, challenges on securing power, challenges on securing equipment and the like. And the combination of Cyrus One and KEPCO, I think, brings a very powerful new competitor to the market. There's strong demand for cloud, there's strong demand for the future of AI. And so I think we'll be very well positioned to meet some of that demand and hopefully accelerate infrastructure in Japan.
All right, so shifting to AI, it's all everybody wants to talk about. It is a big step function, and I think it gets a lot of attention, but I want to ask you kind of this customer segmentation way to think about AI. Do you see it as more of a hyperscale movement primarily? Do you see how is it going to impact the hybrid cloud? So all the people deploying kind of the larger enterprise that have a very, very dynamic hybrid approach to infrastructure. How do you see AI affecting those two different segments, and how different will they be?
Well, I think we call them hyperscalers ultimately because they operate at such a massive scale, and everything I've seen would say that they're positioned to do the same in terms of scale and artificial intelligence that they've done in the cloud and that they've done in other spaces. And so just by the very nature of who those companies are, their customer base, and the breadth of activities that they're in, I think they're going to build and construct platforms at a scale equal to or larger than anything we've seen in the cloud. And that presents a great opportunity for the data center industry. It also, I think, is a reflection of how much opportunity that each of those companies sees in AI for their future growth. And they're all extremely successful, very market aware companies, and so I put a lot of credence in their enthusiasm and their investment commitments. As relates to hybrid cloud, I think on the one element, people are going to look for how do they connect hybrid clouds, public-private, to a third flavor of AI platforms, whether those are hyperscale platforms or otherwise. And we're seeing that where there's definitely deployments going to the major cloud hubs in Northern Virginia, Chicago, Dallas, Phoenix, and other locations, including the West Coast. So I definitely think there will be an element of that because these AI platforms are data hungry, and a lot of what's been deployed in a number of data centers are data lakes and data storage. And it's very natural for these AI platforms to seek out that data. But I also think that just given the unique elements of GPU chip shortages, the skill sets. When both of us were in school, I'm sure there wasn't an opportunity to specialize in artificial intelligence. But now, any student in a computer science field is undoubtedly learning about that. And so as the people skills and the software knowledge and all those things grow alongside the infrastructure, I expect that we'll see new architectures emerge. And much like hybrid cloud emerged out of the need to both solve the security issues, the control issues, and the networking issues, there's inevitably an opportunity for hybrid AI. And that goes back to the point of why continue to invest in these digital gateway markets. It's because they continue to be substantial hubs for clouds, public, private, hybrid, and otherwise, but also other infrastructure that's growing up around them. And we see no signs of that slowing down.
So if you take that one step further, the question is, can the design be the same, what we've been building for, 8 to 10 years? Or does the design requirement for everybody in this industry change because of the magnitude of the change in the delivery?
So first I would say the design has been evolving over even the last 8 to 10 years in subtle and not so subtle ways. As an example, Cyrus One, partly because we operate in Phoenix, made a very strong commitment to start operating only on closed-loop water systems to conserve water and not be a large consumer. And we've evolved our fleet dramatically to a closed-loop architecture. Years ago, open evaporative systems, adiabatic systems were all the rage because they would reduce power consumption, and there was less of an appreciation for the problems it would cause on the water side. So now as we shift to AI, absolutely, I think the designs are going to evolve. We've been hosting and supporting high-density liquid-cooled installations for a number of years, and there's a lot of learning about that. The press release that we did around IntelliScale noted that we were prepared to support densities up to 300 kilowatts a rack, and those are the, whatever it is, 2 or 3 most quoted words in that press release. But it's valuable because the densities are growing, and they're not just growing because we can, there are actually performance drivers that are necessitating density at that level. And what we've experienced and learned and are continuing to share with customers is that just going higher density isn't literally about just cooling the chip. There are a host of design and operational implications of operating at these high density, and it doesn't have to be 300, it can be 50, 100, 200 as well, that come along with that one design factor. And so our learning and our focus is very much about how do you evolve the entire design, both the equipment specifications, the size of the building, the control strategy, the operations strategy, to ensure that we're still delivering a full and robust service above and beyond just being able to cool and deal with some very power-hungry equipment.
That leads me to think about sustainability. And the questions I have around sustainability, the company has been super focused, the whole market is super focused on sustainability. ESG we'll get to in a minute. I know Cyrus One has pledged to be carbon neutral by 2030. I think for the last 4 years, we've had a third party deliver a sustainability report. But I think the questions that are people are most interested in is what are the metrics that, with all of this massive rise in demand and infrastructure, what is it going to do? What metrics are we going to use? And what are we most proud of with respect to sustainability metrics?
So I think proud of several things. I'm very proud of what we've accomplished on the waterfront as relates to water in Phoenix and other markets. I think water in a number of ways is as scarce a resource as power potentially. And being good stewards around water usage for the communities that we're part of is a important step, and one I feel was very wise on behalf of my predecessor to undertake. On the power side, I think the metrics that we're working to in terms of how much power do we source from renewable sources, how much power do we offset with certificates and the like, those are going to be the primary metrics, along with PUE and efficiency. And we're certainly expecting that these higher dense deployments will get us to a higher efficiency as well, which is a parallel benefit. So I think the discussion is going to continue publicly to circle around those metrics. Beyond that, I think we've got to be responsible stewards of not only the site, and are we operating the site in such a way that it is not creating challenges and issues for our neighbors, whether that's noise or landscaping or a variety of other things. But also, are we deploying resources effectively? So are we using recycled building materials? Are we helping our customers recycle e-waste and those types of things? And we're actually measuring in our data centers the amount of waste that goes to a recycling destination versus landfill. And we're seeing the percentage that gets diverted to recycling steadily rise with the cooperation of our customers. And I think that's absolutely the right trend as we move forward.
Alternative energy is, green energy, alternative energy are being used to try to offset some of the demand and the supply shortages on the utilities. What is your opinion of the alternatives out there, whether it be wind or solar or nuclear? What are your thoughts?
So I think the picture differs by where you are. And so here in the U.S., the recent the Inflation Reduction Act, the IRA, provided a lot of strong incentives for renewable development. And certainly Cyrus One is not planning to become a renewable energy plant developer, but we are working closely with a number of renewable energy developers to link their development to our facilities, either directly or across the grid. stable baseload demand that we can provide them helps to make their projects more financeable. And we're going to continue to drive in that direction. And it's done right, it's a win-win-win, a win for us, a win for them, and a win for the broader environment as we progress that. Europe is different. The ability to develop large-scale renewable projects is more challenging in most cases. And so we're exploring opportunities for that. You just don't see the volume of opportunities there that we've seen in the U.S. And then, we've got our eyes peeled. We're waiting to see when and if small-scale nuclear would become feasible, and under what circumstances, because the permitting and the proximity is as big an issue as the technology. But I expect more and more sites, whether they're ours or others, will end up with their own dedicated generation capacity.
On a broader topic, ESG, it's the whole mission critical community, customers, stakeholders, shareholders, employees, it's a big deal. And it's a topic we talk about often. How do you communicate the ESG goals, the initiatives? Is it different communicating them internally than externally to shareholders?
So ESG is a fundamental requirement of dealing with large-scale customers of the sort that we have. And so Cyrus One has both implemented a full program to define the areas where we're going to focus and then to report on them honestly, but areas where we've made progress and not.
How does diversity and inclusion align with the company's broader ESG goals and strategy?
What I would say is, for me joining the company a year ago, building diversity and inclusion within the company was a key area of focus. To a fair degree, the company was still emerging from COVID, the pandemic, remote work and the like, and it was really important from my perspective to build the culture and the commitment across the team that's going to carry us forward, and diversity and inclusion is part of that. And even the executive team that we have today looks markedly more diverse than it was a year ago, and that's great because we've added some extraordinarily talented people to the team, but also people across the company now see people that they can identify with more so than in the past. And so we're going to continue to press on that direction.
And then long term, in a short answer because we don't have much time. What's the vision for sustainability?
From a sustainability standpoint, I'd love it if there were a silver bullet that would solve it, but I think it's just going to take relentless focus and improvement, and we're on that path.
So the two questions: how are you solving construction challenges that come with entering in new markets or expanding in existing markets? Also your take on this in Europe.
Right, so one of Cyrus One's strengths is our supply chain, and that's both on the equipment side and the construction side. And so we're, I would say, well positioned because as we enter a new market, as much as we're assessing demand, we're also assessing our ability to, our supply chain ability to extend. And so, we mentioned Japan earlier. A number of the relationships that we'll leverage in the Japanese market will relate to relationships that we have in the US and European markets. And so for us, we're investing in supply chain continuously. We have an annual conference where we actually talk to our major supply chain partners to plan ahead, and it's served us extraordinarily well. I guess just the next question was what do I think about fiber networking? Is it possible to address power constraints and other issues with super fast network? The answer is yes and no. There's undoubtedly a set of applications where advanced photonics will help, but as enthusiastic as I am about nuclear energy, I don't foresee the speed of light getting any better. And as a result, there are just a set of applications that are going to need proximity or some other technology that brings together the right resources in a particular location. And I haven't seen or forecasted that that's going to change.